Rohit Mehta is the president chief executive officer of Horizons ETFs, which is the fourth largest ETF provider in this country with more than $30 billion of assets and thousands of individual investors as well as advisors. But he's going through a rebranding. Why is he doing that? We're going to ask him right after this. The Just Word podcast is brought to you by Just Wealth Financial. Money Sense magazine ranks Justwealth as the best robo-advisor in Canada in 2024. And the Globe and Mail says that for the third straight year, Justwealth had the highest 5-year after-fee annualized total returns for the growth portfolio. Just Wealth. Investing the way it should be, just for you. Rohit, great to see you again.
Wonderful to see you, Pat.
Okay, tell me first off, you're going through a rebranding to something called Global X, and I know what Global X is, but maybe you can explain in your words.
Sure. So Global X is an innovative investment fund manager brand that's present in, the United States, Europe, Asia, South America, and all part of Murray Asset, which has actually been Horizon's parent company since 2011. So Global X was originally founded in the US in 2008, and Horizons, interestingly enough, was founded here in Canada in 2005. And so, for those that are, looking at Global X, globally, we are, an ETF company that's domiciled in all of these jurisdictions, but we haven't used the same brand in all the jurisdictions. So over time, we've been leveraging that global strength and coupling with local expertise, which I think is a really important point in that the global strength that we have that people will now see with the rebranding to Global X, with the local expertise that people have come to know and love with Horizons ETFs here in Canada. So what we do here in Canada still stays the same. So as I mentioned, we've been part of Murray since 2011. So when I mean stay the same, we continue to run our own business, our own P&L, if you will. I continue to report into a board of directors. And so what we're able to do is bring that intersection together, which is really around innovation, harnessing local expertise, but really coupling it with that global strength.
Okay, why do it now? What was the impetus for this change at this time?
Yeah, that's a great question. When I started back in, we were just chatting about this, back in May 1st of 2023. So, coming up to my 1-year anniversary here, one of the first things I did was reach out to partners, advisors, clients across the country, and just spoke to them about, what they understand of Horizons, what they like about Horizons, things that we can do better. And one of the things that I kept hearing, which was interesting, was that they understood that local expertise I was just mentioning, but they weren't aware of Global X as being a large ETF brand that's part of the same organization. And more importantly, they also weren't aware of Murray Asset, that we're a asset manager with over $700 billion in assets globally. So when we had those conversations and people started to had that light bulb go off saying, wow, so you're in 19 global markets around the world. We are, in terms of how we're building our businesses and leading our organizations, we're looking to deal with a fewer number of partners, but with deeper relationships. And one of the entry components, if you will, is to have that global strength for their clients and their investors. Is that strength, being able to tap into that global strength, but bring that local expertise. So as we were chatting earlier, we crossed $30 billion in assets in December, which was a huge milestone for us. So our largest AUM growth year in our history. And part of that was around bringing this global strength to the forefront, to our advisors and investors. And so as we did that in Q4 of last year, our leadership team came together and we proposed to the board that we rebrand in May of this year.
Okay, so then beyond the name and the kind of the international flavor, if you will there be other things like increased marketing, or will there be exposure to international assets, for instance?
Yes, all of the above. Really, what we're able to do is bring all of the elements of that global strength to Canadians here in Canada. And so, what do I mean by that? And I can give you, a few examples of that. If we take a look at our U.S. Business, Global X in the U.S., incredibly strong in thematics. So we are able to tap into their strength, some of their research, and how they're building products in the U.S. and say, how can we bring that into the Canadian marketplace? So there's a global monthly call on ETFs, who's building what in what regions, what are you seeing in those regions, et cetera. It also allows us to tie into, in our recent filing that will go final shortly and come to market later this year, is around bringing in an India ETF. So tapping into our global strength allows us to bring investors exposure to different markets around the world. So in our upcoming launches, we're bringing an India ETF to Canada, MSCI emerging markets, and EFA. So looking to bring that expertise to Canada. As we're also going through this rebrand, we're able to bring global marketing strength. So, Quebec, for example, is a large market for us. We are able to tap into the global resources, and as we're building this new site, tap in and make sure that we're bringing more strength in terms of Quebec French content for the Quebec marketplace, and helping just be a better partner in terms of personalization for people's journeys.
It's interesting. Roy, you and I go back a long way, and Horizon was known for being creative. They had things like cannabis ETFs or seasonal ETFs and thematics that you've already mentioned. Continuing along those lines, you think in the future, or more traditional?
It's going to be both, actually, Pat. And we will continue. Innovation is definitely part of our DNA, as you had mentioned. It's also important to note that Murray actually it's a South Korean domicile, home country headquarters, means future. And our global tagline under Murray is permanent innovators. So this innovation theme is not something that is only specific to the Horizons organization, soon to be Global X here in Canada, but it is actually something that permeates all of our businesses and organizations around the world. So to your point, we've been innovative, bringing in Canada's first uranium ETF, Hura, first, copper ETF being, COPP or COP. And we've seen obviously movements of those as things like commodities, have heated up, if you will. And we're also bringing more thematic. So we have filed a prospectus for 17 new ETFs. That we plan to launch next month, and that will actually be the most ETFs launched in a month in Canada's history.
I'll come back
by
to
a single
that. I want to
provider.
talk about the growth in the industry overall, and that certainly fits into that discussion.
Yes.
But artificial intelligence seems to be one that you didn't mention. Are we looking at that at some point?
Absolutely. So that is actually one that's in our upcoming launch around artificial intelligence. It'll be supporting companies that are in artificial intelligence as far as bringing in insights, as well as all the way through to producing chips and some of that hardware for and to facilitate AI. So that is definitely a theme, as well as with technology. So technology leaders, so top 10 globally, and that's actually going to be tying in with our. Murray actually has an index business out of India. So we're actually going to be able to tap into, with our technology leaders, ETF is one of our own indexes that we run as a broad organization out of India. But going to the earlier question, is it going to be around sort of innovation or around traditional investments? And so we're actually coupling those together. So in this prospectus, we are going to have the S&P TSX 60, the S&P 500, MSCI EM, MSCI EFA, NASDAQ 100, all in trust format, so full replication. And then what we will have, and we have some of these building blocks already, but we'll have the full continuum of having those on a 1 beta delta 1 replication exposure, and then we're going to have them lightly levered, so 125% exposure. We'll offer them in covered call, and we'll offer them in covered call lightly levered. So we want to have that continuum so that and one of our themes is around that we see is around customization in terms of people being able to want access to a specific, asset class, if you will, or index, but then being able to have the personalization, that customization around getting the exposure that they want, whether it's higher income or higher growth potential.
I look forward to that. Okay, so let's get back to the rebranding,
Yeah.
though.
Yes.
How's the feedback been since you made the announcement?
The feedback has been absolutely overwhelmingly positive. I've been really pleasantly surprised. We have done it in stages as well. So we announced that we're rebranding on March 6th, and we had a tremendous amount of media attention, different people reaching out, our partners, and so we've made a lot of noise around it, and it's been great. The what the official rebrand takes place on May 1st. So that's coming up next week. And what we've got, the feedback we've gotten is, we love how you're bringing this, global strength to the Canadian marketplace and bringing it in terms of the transparency around it. We also like how you've are working with us to help in this transition to Global X in terms of, not just announcing one day you're changing the brand. It's, we're changing the brand. Here are the steps, and let's communicate through each of the elements so that people aren't surprised in terms of what they're getting. They know what they're getting, and we're actually able to get them excited for it. So can't wait for it to actually go live next week.
Yeah, indeed. Okay, let's broaden the discussion, because you mentioned you had a really record year in terms of growth, but so has the industry. I mean, ETFs have been exploding all over the place, and that's in part because of robo-advisors, but also individual advisors trying to keep their costs down. And yet, the mutual fund business is still bigger. Do you think ETFs will ever catch up?
I think over time, as we take a look at the growth trends, it's a matter of time on when those converge and when they cross. As we've seen more recently, you look at 2023, ETF sales were $37.5 billion, while mutual funds were in net redemptions to the tune of just over $57 billion. So you're seeing a big delta there. I think you touched on a couple of the keys in terms of, that ETFs for investors looking to bring down their fees and understanding the importance of fees. And ETFs have really democratized investing. And this goes back to our conversations that we were having a decade ago, Pat, in terms of ETF growth and what we're seeing. And so because they started off at zero, but have been growing, and mutual funds had definitely a head start, we are absolutely seeing that trend. And to your earlier point, it isn't a Canadian specific trend. You're seeing this happen in jurisdictions around the world. I don't think, to be clear, I don't think that mutual funds are going to become, obsolete, if you will. There is going to be a need for, different tools, and for investors that might be more comfortable or have a reason to buy a pooled investment in a mutual fund vehicle versus an ETF. But the ETF growth is here to stay.
Let's talk about Canadian investors in particular. What do you think the average Canadian investor is looking for as far as an investment experience? And I'm thinking in particular millennials, because they're going to inherit a lot more wealth.
So I think, and I look at my kids in conversations with them, it's around personalization. It's around, on demand, digitally forward information, and that opportunity to customize. And so they can, consume and transact, when and how they want. I mean, we only have to look at, even our conversation today, in terms of this would, we weren't having these conversations like this in this forum 10 years ago, or even a few years ago, for that matter, right? It was much more, in person, much more traditional, media distribution venues. So I think from a millennial standpoint, there's an importance and a need to be able to allow them to consume information the way that they want to. So they may not be reading a traditional newspaper, but they might look and have you look at a finfluencer and look at different ways that they want to consume their information. And so it's not about limiting how they can consume it, but it's about helping make sure that wherever they're consuming it from, that we're able to give them the right information, the best information to make educated decisions. I also think that we're seeing it not as much as I'd like to see, but we're seeing it more so in the educational system, more knowledge or more information around personal finance. And I think that's going to be empowering, one, and two is important in terms of that the digital era we're in.
No question. It's interesting though, the products sometimes, move because of the regulators. And one that's been really popular, for instance, is high interest savings accounts and ETFs associated to those. And the rules got changed, kind of midstream, got changed around those ETFs. Has there been an impact at all, or investors savvy enough to know what's going on?
Well, I mean, twofold. I think investors are savvy enough, and I do think that there has been an impact. To your point, high interest savings ETFs have been one of the most popular ETF asset classes in the last 5 years, and make up about 20% of the overall fixed income ETF category now in Canada. So what you're referring to is the OSFI rules that changed last year and officially came into implementation in January of this year, which changed how the banks characterize and treat the deposits on their balance sheet. And so that change has impacted the yields. So they have come down. Having said that, I was just looking earlier today on our cash ETF, so our Canadian high interest savings ETF, and it's 4.69%. And so when you take a look at what someone's able to get with no duration, so no volatility in terms of interest rate impact if rates were to go up, yes, the yield would go up or down, but not like a bond where the principal value can go up or down in terms of duration. And so investors have really seen this. And if you take a look in a rising rate environment, which we have been in, not so much anymore, which we have been in, they were an incredibly valuable tool for investors, and they still continue to use them because ultimately they are like a cash vehicle, and the yields are significantly higher than an investor would receive just putting money in a high interest savings account in a bank branch.
Justwealth is a sponsor for this show, as you know. Excuse me.
Hmm.
And they've seen a lot of growth in retirement products. And I'm thinking about things like target date funds, for instance. Do you see a lot of growth in the retirement area in terms of products?
Absolutely. And it's driven by, in my view, a few key drivers. One, by the end of this decade, 25% of the population is going to be 65 plus. You couple that with people living longer, so life expectancy is increasing. And the third key element is the erosion of defined benefit plans. So 20 plus years ago, people in many sectors would work for, their working years. And when they retire, they're going to get a defined benefit plan that was indexed to inflation, that would allow them to have a stable source of income on an annual basis that was tied to inflation. What we've seen is other than in the government space, in the private space, defined benefit plans have been replaced by defined contribution plans, if anything at all. And what that means is now investors have to have tools and a way to manage their nest egg to provide them with cash flow for living, not just for trips and discretionary spending, but to actually live. And then on top of that, they have to be able to plan for a longer retirement for a longer life expectancy. So I think the growth in products and tools, investment products for retirees is going to be a longer term trend, not a short term trend.
You mentioned that MRI stands for future. What's your vision of the future of investing for Canadians or ETFs or the whole spectrum?
Investing is one of the things that is going to become an element of education for that every Canadian to be empowered to invest. If we look historically, people worked hard for their money and then handed it to somebody else but weren't necessarily that well versed on being hands-on, really being empowered. And so I think it really ties into the future is around education. It's around bringing choice, and it's around leveraging technology to be able to provide investors with optimal outcomes for what they're looking to do and achieve. And so I think you're going to see that's a lot there to unpack, but you're going to see that that's going to translate into a growth of different platforms, whether it be advice channel, whether it be robo or digital advice, whether it be discount brokerage, and then the tools that cascade from that and the interactions is all going to be wrapped in terms of personalization. So I'm excited about what the future holds, and technology is going to be a massive driver for empowering that growth.
Rohit, great to see you again. Thank you.
My pleasure. Great to see you again, Pat.
Rohit Mehta is the president and CEO of Horizon ETFs.